Welcome to Verena Financing Podcast. I'm your host, Christine Mills. On this podcast, we help and equip entrepreneurs to grow and finance their business. Thank you for joining. Today I'm going to discuss, it's a numbers game. That's the title of the podcast. It's a numbers game. Know your business numbers. I remember when I first started Verena Financing, I met with an established funder, and he said something that I will remember to this day. He said, it's a numbers game, Christine. I initially thought it was in relationship to the rule of probability. The more doors I knock on, the more likely I will get a client. However, I soon realized that the term numbers game goes beyond just sales, but every other area of business. That is why I'm dedicating this episode into encouraging each of you to know the numbers behind your business. So I'm going to take a top-down approach using a typical profit and loss statement as a guide. Profit and loss could also be called P&L statement. The first is your sales number. Sales or revenue is calculated as a number of units sold times price. So if you have a service business, that will be the price of your service times the number of your clients. For example, if you charge $100 for your coaching service and have 100 clients, your revenue will be $10,000. However, when looking at your revenue, you have to also think of ways you drive your sales. Sales drivers are activities we engage in to increase our revenues. This can include marketing, promotions, lead generation, and any other investment to increase our customer acquisition. Be mindful that there are 3 ways in general to increase revenue. So you increase your number of customers, you increase your product offering, and you increase your price. The second number you should be mindful of is your cost of goods sold. This includes the cost of producing your item times the number of units you purchase. So if you're selling candles, this will include the ingredients used to manufacture the candles times the number of candles you make. You will then deduct the COGS, the cost of goods sold, from the sales to get your gross profit margin. Your gross profit margin is the money you have available for other expenses like marketing, rent, payroll, taxes, and other administrative expenses. I'm going to pause here because profit margins are very important to know. If you don't have much money left over from your expenses after just creating the product, you may be pricing your product too low, or you need more customers to make your business a viable business. You also have to know the industry standard. So if you make $100 in sales and your gross profit is $80, it costs you $20 to make your products. However, if you don't know your gross profit margin, really know that works for you until you look at your peers. So check out Risk Management Association, RMA, to see how your industry and revenue size equates to profit margins. The last part of your P&L will be the administrative expenses, which will include rent, payroll, marketing, and any other administrative expenses to run your company efficiently. So this is, and then after that, you have your taxes and interest. Your taxes will be based on your state laws, and your interest expense will be based on the interest of your debt. That is why it's so important to get as low of an interest rate as possible on your loans, because it will impact your bottom line. This brings us to our net profit. Your net profit in its simplest form is your sales minus all of your expenses. This shows how much money you have left to reinvest into your business or to distribute to the owners. Distribution are not to be confused with your salary. Distributions are what you take out after your company's net profit, or what you have left over after all of your expenses. Whereas your salary should be part of your administrative expenses. Let's be clear. If you have a salary of $50,000, that's already above the net income. But if your net income, say for instance, $500,000 after everything, and you want to take an additional 100,000 at the end of the year and reinvest the rest, you can do that. And it'll be $100,000 you'll be getting as a distribution at the end of the year. And then you'll also get your $200,000 salary throughout the year, however you're paid. So you have gotten $300,000 from your company. I believe that when we start a business, you should find some way to pay yourself, even if it's $100. It's good mentally, and it also starts you off with the idea of being on the books rather than taking a little bit here and there that you might not be able to track. In order to know your numbers, you will have to track it over time so that you get in the habit of recording your numbers in Excel or QuickBooks or any other program you may be comfortable with. So the sooner you get in the habit of actually writing down all your numbers and recording it, the sooner you can find a frame of reference. Okay, so I did $20,000 more last year than this year. What went wrong? And you could actually analyze what's going on in your business. Again, the number one reason why companies fail is not because they may not be working hard. It may not be because they lost passion. It's because of cash flow. And if you're not recording your numbers and actually analyzing to just see what's going on from year to year, you fully don't know what's going on in your business. And this brings me back to the course that I have. It's MBA in a Box. You can find more about it at www.verandafinancing.com/M as in Monique, BA, like Masters in Business Administration, in a Box. So it's MBA in a Box. It'll be a great way for you to fully understand your numbers. I hope this podcast episode was helpful to you. If you have any questions, please feel free to contact me at cmills@verandafinancing.com. I am always looking for new customers that I could help grow their business. I could help you get financing, and you may be able to get more than you think you can get. Again, it's always a pleasure to have you join me, and I don't take it lightly that you took out time of your day to listen to my podcast. And thank you for sticking with me, and I hope that you're learning a great deal that can impact your business for years to come. Again, please review this podcast and also subscribe so you can hear the latest ones on a weekly basis. Bye now.